Thanks, Kiran garu. Yeah, welcome everyone. I'm Vijay, Mata General Secretary. Thanks Anil Garu for accepting this event and this tax session. It will be definitely helpful for everyone whoever is filing the taxes. And we know it every year there are a lot of rules are changing, and you are very helpful explaining all the tax related things. I would first, Anil Gar, before hand over to you. So I would like to hand over to our president, Mata. So he's a young and dynamic leader, and he's encouraging the team to conducting very helpful sessions to the our community. Um, thanks, Kiran, for that. So, and we do have few of our Mata leaders also. So first, let's give it to Kiran Garu.
Thank you, Vijay. I am Kiran Dudagiyandi, the president of Mana American Telugu Association. First of all, I would like to welcome everyone on this call to the MATA Strategic Tax and Wealth Planning Seminar with Anil Grandhi garu. Definitely, we are honored to have Anil Grandhi garu. He is the CEO of AG Fintechs. He's a renowned financial expert and also industry leader. Um, he has a couple of recognitions, and he has been recognized as top 20 dynamic CEOs of 2022, and he is the member of Forbes Financial Council for 2024. Out of all, he is our MATA honorary advisor, and he has helped us with these kind of seminars in the past. Last year, we have conducted one of the tax seminar. We got excellent response from most of the folks, and because it's the tax season, as just now Vijay has mentioned, so we thought about it's a very timely to provide tax strategies and also wealth planning seminar for everyone so that they can get benefit, especially for the MATA community. So as part of MATA, we do a lot of events, such events, right? So there are multiple events has been lined up. There are a couple of sessions, information sessions online and also in person. Especially the online sessions are like we have conducted the financial planning session last month. Then the upcoming events are healthcare seminar, basically for the chronic lung disease and COVID compliance on April 16th. Please try to avail that kind of join that seminar and also get insights into how the chronic lung disease and COVID complications will affect and what are the precautionary measures you have to take. And then we have an immigration law seminar, basically that has a couple of topics on recent trends in immigration, H-1B visa issues, Dropbox changes. There are a lot of deportation trends happening these days, right? We're going to cover that on April 10th. Then we have a lot of free health clinics across multiple chapters, so you can avail that services as well, those services. And we are conducting a couple of Earth Day cleanup events because Earth Day is coming soon, and our community services director and also community services chair and teams, they have hosted multiple events to support Earth Day. At the same time, we have Suresh Kazan on this call, who is our sports director. He is hosting a national carom championship on May 1st. It will go for 4 days. The championships will go for 4 days. If your friends are interested, please go and join that. All this information is available on our mata-us.org website. Please go, become a member, and avail all the services. Again, with that, I think Anil Garu, you will definitely help us share your expert insights on most of the tax strategies and wealth planning and compliance, right? So thanks for doing that. Uh, yeah, again, if anyone interested, please go to mata-us.org and get membership done, and you will get all this communication in through emails. Okay, thank you, Vijay. Back to you.
Yeah, thanks, Kiran Garu. Yeah, so as Kiran said, like there are a lot of events going on. Every week there would be something else from Mata. So please go ahead and look at into the website and also be part of the Mata member. So you will get updates continuously. And just like quickly, we have a couple of few other EC committee. So have your comments also. So Praveen Gudur Garu is here. So he's Mata EVP. Executive Vice President, Praveen Garu.
Yeah, thank you, Vijay. Good evening, everyone. Good evening, Anil Garu. Actually, you always give great inputs in lots of areas like tax and financial advising and other things. It's not new to us, and I have been to your sessions many times before. and it's a very valuable session. And I hope all the Mata community can avail this kind of information from you and get help from you, and that is really valuable. So yeah, we would like to do more sessions like this with you and many other people, and all the Mata members whoever joined here, please see our website and see what are the different informative sessions going on, and please join and avail these facilities and these sessions and information for your personal use and for your friends and for your family. And Anil Garu, thank you very much for joining, and please go ahead and use your valuable um, webinar today, and thanks for that.
Thanks, Praveen Garu. So we do also have Sridhar Gudala. He's from Pennsylvania and is also Mata treasurer. Sridhar Garu.
అందరికీ నమస్కారం, గుడ్ ఈవినింగ్. అనిల్ గారు, థ్యాంక్స్ అండి. టేకింగ్ వాల్యుయబుల్ టైమ్ ఇస్ అ వెరీ బిజీ టైమ్, సో ఐ డోంట్ వాంట్ టేక్ మచ్ టైమ్ హియర్. మనకు అందరికి తెలుసు ఫిజికల్ హెల్త్ ఎట్లాగా ఇంపార్టెంటో, యూనో ఇస్ ద ఫైనాన్షియల్ హెల్త్ ఆల్సో వెరీ ఇంపార్టెంట్ ఇన్ ఆల్ అవర్ లైఫ్స్. లెట్స్ make use of the time, and this is a wonderful opportunity for the community, and let's get into the session. Thank you. Thanks for the opportunity, and welcome to the Mata family.
Thanks, Sridhar Garu. So we do have one more executive committee. Suresh Kazana is a sport director and is conducting multiple events, across the US, sports related. Can I have a quick 1 minute, Suresh? Suresh, you there? Okay, that's fine. So any executive committee before I hand over to Anil Garu? Anybody here? Okay, thanks Andy, thanks everyone. So as Kiran said, Anil Garu is our honorary advisor also, and is very helpful. So whenever we have a questions, he's always ready to help us. So Anil Garu, thanks for this opportunity, and hand over to you. So you can start.
Thank you. Yeah. Thank you, sir. And thank you very much to the Mata for giving me this an opportunity to share my knowledge with the community. And special thanks to Kiran Garu, Vijay Garu for all the coordination, and Praveen, Sridhar, and others also for joining this evening. And very good evening, everyone. First of all, thank you very much for everyone to joining in the late evening. It's already 8:43, but still you guys are joined in the family time. But definitely for the next 45 minutes to 50 minutes, I will go through what all the things can be done before this filing your taxes, which is a June, April 15th. Even after, if you are filing an extension, also what opportunities we have, and also for this year, how you can do some planning. Apart from the taxes, I would also like to add some flavor of wealth. It's not about what you earn in the year, it's about what you keep in your pocket. So like example, in the last few years, we all are in America for so many years. Many people are in decades. For a couple of decades, they are in US. You have been paying taxes. For every dollar you are earning, you are paying 30, 40, 50 cents for every dollar in taxes. It's like a donation to IRS. But imagine if we can have a better planning in the so many years, if that money can be used for the savings, by this time your wealth will be much better. Past is past, at least start doing now, at least have a proper planning. Only planning can change the things. If you are only thinking about taxes just to file your taxes, it is called proactive, reactive. For the 2024, you are filing taxes now, it is called reactive approach. But at least for the 2025, if you start planning from now, it is called a proactive approach. Anytime in the world, in the universe, only planning can get you better results. So if after the fact, there is nothing much you can do. But still, today I will try to cover whatever we can say, whatever we can guide. So I am sharing my presentation. Okay. So today, whatever I'm sharing, I'm just sharing my knowledge. Sorry. Today, whatever I'm sharing, I'm just sharing my knowledge. Sometimes this may be applicable, may not be applicable. So I always strongly recommend everyone to talk to your an accountant or CPA before you file your before you implement any of the strategies. Or otherwise, at least talk to me. There is a calendar you can see all my contact details. We offer a free 15 minutes consultation to anyone. If just casual, if you want to talk, a 15 minutes free call, me or my team of CPAs, one based on our availabilities, we can answer all your calls. It's a free call. You can ask for a free call for 15 minutes. You can just reach out to me. Ensure that those are applicable for you. So, and if you are hearing me for the first time, we have done some session in the November or December of last year. But if you are hearing me with the Mata, but if you are hearing me for the first time, this is a very brief about me. My name is Anil Grandhi. I am the CEO of AZ Fintechs and also Grandhi Fintechs CPS INC. I have 20 years of experience in the core tax and accounting field. I worked earlier for Amazon, Starbucks, PricewaterhouseCoopers, and also Sun Edison. I have been serving as a Forbes Finance Council member. We are based out of Dallas, but we have licenses to do file tax returns in all 50 states of America. We have clients US wide, and we are experts on tax planning, tax filing. Why I say the expert is, in the history of AZ Fintechs till now, we didn't even get a one single audit notice for any client in any states. So that is what the quality what we maintain. We are experts on tax filing, with tax planning and bookkeeping, accounting services. I am also a chartered accountant from India. So if you need any help in India, moving the funds from India to here, US to here, or you filing a tax returns in India, or estate planning, estate and financial plannings also. So, and if you are looking for, because just first, because of just I want to focus on one point. April 15th is the due date now to file taxes. If you're looking for filing a taxes, still we are accepting clients. You can just reach out to us. You can scan the barcodes. You can see it on every slide. You can scan the barcode and you can start working on it. If you want our help in filing your opening of LLCs or S corporation or C corporation, we just charge $99 to including the consultation. We sit with you, understand your business requirement, understand your long-term vision, and we guide you what is right for your business, S corporation, C corporation. And exclusive for Mata members, we are giving 10% discount on our tax filing fees or tax filing services for the individuals. And exclusive for Mata members, we are also doing free tax planning for every individual client one-on-one. You might have been filing taxes in the last 10-20 years, but you would not have met your accountant or CPA to for the planning. But after filing the taxes, we will sit with one-on-one, understand the situation, and we do a proper planning for you. And also financial planning like retirement planning, kids education planning, diversification of investments, all those things. And we do complete audit protection. Once you come into our radar, if an audit notice comes up, we take care. You don't need to worry. You don't need to stress it out. We will take care of the complete responsibility. So that's what we do. And if you're looking for, just refer Mata name and you can claim your 10% of discount. And let's get into the topic slowly. So, and being a Forbes Finance Council member, I have been writing a lot of articles, and I'm also supported with a very big team of CPAs, chartered accountants, and other finance professionals, totaling to more than 100 employees. We have CPAs in New Jersey, Dallas, Florida, even in Houston, and many other places. We have CPAs, US wide, we are scattered. And people think they can save a lot of taxes by filing tax returns now for the last 2024 year. The opportunity to save taxes are very less because if you are doing a reactive planning, as I mentioned, always you need a proactive planning along with working with the right professional. Our success always depends on with how strong our team is. Right now, Mata is doing extraordinary great because we have the great president, great general secretary, and a big leadership team. Members in the team are very, very important. In the same way, in your life, doctors, attorneys, and CPAs, and also those three people are very important. First, find out who can bring the value. Don't worry whether you're an accountant or CPA, you are working with the last 10 years, 20 years, doesn't matter. Your accountant is living within your community, doesn't matter. Your accountant or CPA is your friend, it doesn't matter. Is he bringing the value or not? Because your first step to save taxes and build wealth starts from there. You need to identify the right guy who can bring the value. And why we need to think or talk about all the taxes? Because this is a tax season now. We need to file taxes by April 15th for your business, that is a C corporation or individual tax return or single member LLC. If you're running an if you're having a partnership business, March 17th is the deadline. I hope you already filed an extension. If not, there is a penalty of $175 per partner per month. If it's an S corporation, you missed to file an extension, you need to file your taxes immediately. So it's very, very important. If you're not yet ready to file your taxes, you don't need to do it in the rush. By April 15th, you are only just 2 weeks away. If you're not yet ready, it is okay. File an extension and you get 6 months of time, but pay taxes by April 15th. If you don't pay taxes, you will be ending up with interest and penalties. And when you want to work on your taxes, these are very important steps. The first thing, you need to take out your last year tax return, review the tax return, understand where you are, and get all the documents, relevant documents, like whatever the income sources you have, W2 income, 1099 income, dividend income, interest income, K1's income. Get all those documents. Do it peacefully. Then once you get all the documents, then give it to an accountant and start working with him. And if you are a business owner, means even you are getting a 1099, you are a contractor, IT consulting company, or you are a small contractor working on 1099, then you are still considered as a business owner. Or you are a small business owner, self-employed, photographer, real estate agent, financial advisor, insurance agent, or whatever business you do, these all are self-employed. You need to know your numbers. Finalize your numbers, finalize your books, what are your sales, review all deductions, review your bank statement completely, all the transactions, and understand how much net profit you have from your business. And this is a very important slide. Avoid IRS red flags. In the last couple of months, we have noticed the number of audits have gone up substantially high because IRS started using AI. With the AI technology, now they are able to compare any person's tax return with any person in the same income levels or within the same industry or same business, so that it's how others are claiming what you are claiming. Are there any unusual expenses, or if there are red flags are there? Red flags are very important. You need to ensure that there are no red flags on your tax return. It means if you are working with an accountant or CPA who is doing some manual adjustments in whatever way you want to save taxes, please stop working with those people. Finally, you are the captain of your ship. You need to pay taxes. You need to be in compliant. If there is a fraud, if there is a problem, your tax return will be red flagged. That means you will continue to get lot more notices in the future. So the number of audits are going to go up substantially high. Please stop doing any manual things, manual adjustments. If you are earning money, you need to pay taxes. Be fair and pay taxes. Legally, there are many ways to optimize taxes. Focus on that. It's okay. Past year, if you couldn't do much, but you pay taxes, but don't goof up your numbers. And also, file your taxes on time. Very important. If you are not filing taxes on time, it is also a red flag. If you are filing an extension, it's okay. But if you're missing the deadlines, it is a red flag for you. And also, if you are a Schedule C owner, that is, if you are a small business, if you have a Schedule C, the probability of audit is 10 times higher than S corporation owner. So consider, if you have a decent size of income, consider converting it as S corporation. And also, if you are having any side business, if you are claiming some expenses or deductions, be ensure that those are not unusual. Those are not unusual. Okay, so then whatever business, I'm sorry, sir. Okay, whatever business you have, whatever income you have, whether you have an income, whether you have W2 income or stock market income or real estate income or business income, you need to add all those incomes and optimize your deductions. The more deductions you claim, the lesser taxable income, the lesser tax liability. So it is very important to maximize your tax deductions. And when you're filing an individual tax return, we have two options: standard return, itemized. What is the standard? In America, every one of us married filing jointly, if they are US resident, they can get a tax deduction of $29,200 flat. Whatever money you make, you don't need to pay taxes for the first $29,200 married filing jointly. But apart from that, you can also claim IRA and 401k and HSA contributions. But if you want more deductions, then you need to go for itemized tax deductions, where you can claim where what IRS says. IRS has identified 5 major expenses. If all these expenses together exceeds the standard deduction of $29,200, then you can go for itemized. What are those 5 deductions? Mortgage interest, your local taxes, local, state, and property taxes, medical expenses exceeding 7.5%, and charitable deductions. If you add all this together, you will know whether you want to go for itemized or individual. You may say that, why do I need to know? My accountant or CPA will take care of it. But unfortunately, if you don't give this information to him, he think you are not eligible for itemized, and they go for standard by default. So it is your responsibility to give all this information with accountant. And also health savings account. Health savings account, this is a last minute tax saving tip. If you already have HSA account, if you have, you can contribute to HSA health savings account if you have high deductible health plan. If you have that for the last year, you can contribute $8,300 before April 15th. By contribution, you can enjoy the tax deductions now. And a lot of times what I noticed is, even you have $8,300 limit, people don't contribute to that extent. They contribute only 2,000, 5,000, 1,000, 500, or zero. You are missing the opportunity, because for $8,300, if you're contributing, literally you're saving around 30% in taxes, so which is $2,000. Instead of paying to IRS, you can keep that money with you. This money, there is no lapse. Once the money gets into this account, you can use this money for any qualified medical expenses in your lifetime. So there, you don't need to worry that money, you will lose the money. Once you enjoy the tax deductions, and the money can be used for any qualified medical expenses in your lifetime. 529 plans. If you have kids, a strong recommendation is open 529 college savings plan. And I am doing a webinar on exclusively on kids savings account, kids college saving plan in the I think on April 12th. I'm doing it. If anyone is looking for a webinar, I will send those details. But the thing is, otherwise, if you're following my newsletters, all my new updates will come to you automatically. You can see the barcode in the bottom. A college savings plan, 529 plan, plays a key role. In America, college fees are very expensive. 100,000, an average 50,000, 100,000, 100,000, based on which college the kid gets into there. You can start contributing to the 529 plan and enjoy the tax deductions at the state level, and the money can be invested in the stock market for now, enjoy the tax deferred growth, and in the future the money can be used for any qualified education expenses. Very important. If you're not eligible, now what I noticed is, many financial planners, advisors, what they say is 529 is not a great plan. But in the last couple of years, every state has updated their 529 plans. The number of investment opportunities have gone up substantially high. And the opportunity, how you can use where you can invest the 529 plan. On top of all, from the last year onwards, IRS has done a very big change as part of Secures Act 2.0. What it means? If your 529 plans are not used for the kids' education, my kids might have got a education scholarship, okay, financial aid or something they might have got, then they're not using it, then you can roll over $35,000 from your 529 account to your individual Roth IRA account in the lifetime. Very, very important. So 529 plans are very important. But earlier, I was also not so positive about 529 plan, but in the last changes, whatever happened, now we encourage people to contribute. If you cannot use it for a kids, up to $35,000 at least, You can roll it over to the kids for the Roth IRA account, charitable giving. So I know we all are very broad at heart, and we have been doing a lot of donations. If, like example, if you want to donate to any non-profit organization, including Mata organization, you want to donate $500. My recommendation, instead of donating directly cash, go and donate to Tesla stocks or any stocks. If you have an appreciated stock like Tesla, Amazon, Microsoft, or whatever it is, if you have some stock, if you sell those stock, you need to pay capital gain taxes. Rather, you can donate those stock directly to the Mata or any non-profit organization. You enjoy the tax deduction at the fair market value. It means you are saving long-term capital gain taxes or short-term capital gain taxes there. Number one. On top of that, whatever money you contribute, you can enjoy the tax deduction if you are filing itemized. So charitable contributions are double benefited if you are using stock donations rather than cash donations. Even you can donate even $100 just by donating. You can go to the Vanguard, Fidelity, Robinhood. If you want to go, if you want even there is no limit on how much money you can donate through your stock market. But please understand, you enjoy the tax deductions only if you are filing itemized tax deduction. Otherwise, you will not get this tax deduction. Investment strategies, as I said, apart from the regular tax savings. So now you implement all this, you build the money, you save the money, correct? This money has to be invested somewhere also. That's what the investments. As per my knowledge of working with thousands of people US wide in our community, I believe we earn more than what we require in general. The money we are saving money either in the stock market or real estate. Now I will cover about couple of tax saving opportunities there. If you are selling your primary home and if you lived there for at least 2 years in the last 5 years, and if you're selling it, you don't need to pay any capital gain taxes at all up to $500,000 of gain from the sale of your property. And tax loss harvesting, in the last couple of months, stock market is very much volatile. If you have investments in the stock market, if any stocks are in the red because they are on unrealized losses, consider this as an opportunity to sell those stock and book those losses. These losses can be adjusted with any capital gain, not only this year, any time in the future. The capital gain can be from the short stock market or from the real estate, short-term capital gain or long-term capital gain. So it's a great opportunity. You don't lose your losses. And the losses can be rolled over to year on year after adjusting $3,000 with your W2 income every year. Very important point, one catch here is you cannot buy the same stock within 30 days. If you are using the tax loss harvesting, and there is an exception for cryptocurrency or bitcoins. If you're selling those stock at losses, book the losses, you can buy the stock immediately. The bitcoins or cryptocurrencies stocks can be buy immediately. There is no wash sale rule applicable for cryptocurrency. But if it's a regular stock, if you're selling it to book the losses, then you cannot buy the same stock within 30 days. And build wealth with real estate. One of the great way to build wealth is buying real estate per one property per year. To think it is very difficult, but if you can break it down, it is very easy. Every year we should buy one property. You don't need to buy in Edison area or Dallas Frisco area or maybe in California Bay Area. You can buy the properties anywhere in America. What is the down payment we put? We only invest 20-25% for our investment property. Who will pay the balance amount? Our tenant will pay. When you need to, whenever you buy the property in such a way that the every monthly income, whatever the rental income you get, that takes care of your house EMI. Then you should end up with a positive cash flow. That is the only way you need to buy the properties. If you keep buying the properties expecting in the future property will be appreciated, that is not the way how you buy. You need to look for your passive income. There is a power of leverage. That is, someone else is paying the money, you are buying the asset, and you enjoy the appreciation. You may say that, Anil, this is not the right time to buy the investment. You cannot time the market. I am a wealth advisor for many millionaires, ultra high net worth individuals. So if you can, you keep buying, averaging out, keep buying it. Even you bought a property, if it has a positive cash flow, the market is down. How does that matter for you? All our investments are for the long run, and also there are a lot of tax benefits. And if with by keep buying, imagine in the last in the 10 years, if you would have bought one property per year, you may say that it's very difficult. Recently, one of my client bought a property in St. Louis, in the suburbs of St. Louis. He bought the property for $160,000. What is the down payment he need? Just $30,000 to $40,000. If you can't even take 30 to 40, $50,000 per year, then you are not even in the right profession what you are working. So take that money, buy the property, keep buying, keep buying. If you are in America for the last 10 years, you should have 10 properties by this time. If you're not having, then there is a lack of awareness. That's what I said. Our success depends always on with whom we are surrounded by, with whom we are working. You need to have a right advisor who can guide you, and it is practically possible. I have clients who has 120, 140, 230, 80, 70, 60 houses. I'm talking about individual houses, group houses, condos. It is possible. From our community, many people, many Telugu speaking people, US wide, have been buying so many properties. If you have not started your race, you are missing that opportunity. The day you have a passive income, you can go for a forced retirement plan. This is the wealth building strategy. Then apart from that, you can also claim many expenses: mortgage, interest, auto, travel, computers, tools, supplies, mobile. See, if you are in W2, you can't even claim your mobile monthly $40 bill. But if you have a house, you can claim few of the computer tools and supplies and other expenses also. So buying a real estate property has a lot of advantages. If you already have more than 5 properties, you should not pay a lot of taxes by this time. There are a lot of advanced tax plannings are available. If you already have a lot of real estate property, we are an experts on the real estate. Reach out to us. We will guide you on one-on-one. And apart from that, there is an advanced concept called cost segregation in the real estate, where you can claim accelerated depreciation and enjoy the paper loss deductions. That means there is no cash outflow, paper deductions, and it will reduce your tax liability. So cost segregation is a great tool to when you build your real estate. And also 1031 exchange. If you look into I keep spending time on understanding how you multiply the money, how the money works, how millionaires, billionaires are spending their time, or how they're planning it. In this process, the successful millionaires, they don't sell their properties. If they sell the property, they need to pay 23.8% federal taxes and also state taxes. Rather, what if they really need to sell a property, they go for 1031 exchange. It means whenever you sell a property, you have to reinvest the entire proceeds to buy similar property within 180 days, so that you don't need to pay any taxes now. You are deferring your tax liability. 1031 exchange is a great strategy. If you're thinking about selling a property, please consider it. Retirement contributions. And retirement contributions are great. In America, the people, how many people save money for the future is very nominal, less than 1 to 2%. So IRS is giving so many incentives, tax advantages to encourage people to save money for the future. And like in that, 401k is one of the great account. Recently, I have done tax webinar on 401k itself. It's the last weekend I have done, on I think last Saturday, March 30th, I have done tax webinar exclusion. How do you manage your 401k? 401k is one of the great way how you build long-term retirement planning, because it allows you to contribute every year up to $23,500. If you're in 30-40% tax bracket, you are saving $7,000 to $8,000 instead of paying to IRS. You are saving that money just by saving this. And if you are more than 50 years old, $7,500 catch up, big number. Don't miss this opportunity. And if you have an employer free matching, you should not lose that free money at all. It's a free money. If you contribute, employer is matching. Don't ever miss that free contribution. And people think 401k, you cannot touch the money till 15 and a half years. I need to give a small clarification here. Many Indians, because we didn't study here, we don't know the tax laws. Most of them are in IT. So how do you expect them to become a tax experts or financial experts? So I want to give a clarity. Once you have contributed to the 401k, whenever you quit your full-time job, that money is accessible for you to invest anywhere: stock market, real estate, cryptocurrency, lands, or pre-IPO startups. You can invest wherever you want, but you cannot withdraw into your personal bank account. And whenever you invest like that, you don't need to pay taxes. It is called self-directed traditional IRA account. You can roll it over and do it exclusively on this topic. I have given a webinar last Saturday morning. If anyone wants that recording, we have more than 500 people joined that session. If you're looking for that, reach out to send an email to me. I will send the recording to you. And IRA, individual retirement account, everyone of us in the call can contribute to the IRA, individual retirement account. There is a myth that we are not eligible for IRA. That itself is a problem. Everyone can contribute to IRA, but we will not get a tax deduction. Jeff Bezos, Mark Zuckerberg, Kiran, Vijay, Anil, Ramesh, every one of us can contribute to IRA. It doesn't matter what income level you are. And but how much money can contribute? $7,000 you can contribute, and your spouse can also contribute $7,000. Both can, even though she is not working. You have time till now, April 15th, to contribute for the year 2024. Please don't miss this golden opportunity. If you have been following me on social media, I have been talking about this IRA. This is a golden opportunity. After April 15th, you will miss the opportunity to contribute. Blindly go and contribute to traditional IRA first, number one. And if your incomes are less than $143,000 for the last year, married filing jointly, you will get a tax deduction. If your incomes are, if you or your spouse, one of you doesn't have a 401k, or she is not, one of you were not working, then you will get a tax deduction until your incomes are $240,000. You have time till now, before April 15th. Please go and contribute, enjoy the tax deductions. And this is for the traditional. If it's a Roth, you will not get a tax deduction. You will not get a tax deduction, but money get tax. You can only contribute post tax money, but after that, money grows tax free forever in your lifetime. A great way to build tax free wealth. You don't need to pay taxes on that income forever. Imagine last 10 years you have been contributing $13,000-14,000 for you and for your spouse. You have $150,000 to $200,000 of income right now in bank balance in your Roth IRA account. This money can be used for any investment: stock market, trading, real estate, cryptocurrency, pre-IPOs, startups. You can loan to your friend also for $2 interest. You can do whatever you want on the investments, but you don't need to pay taxes forever in your lifetime. If you don't have a Roth IRA, this is a clear sign that you don't have the right advisor working for you. And if I see, even millionaires have a Roth IRA. If you don't have Roth IRA, you need to think, why I don't have it? Because all successful people are having it. So if your incomes are less than $240,000, you can directly open Roth IRA. If your incomes are more than $240,000, there is a concept called backdoor Roth IRA, a beautiful concept. Where what happens, by default you will not get a tax deduction. If your incomes are more, you cannot contribute, but it can be done in two tax steps. Now we all know what is the power of Roth. If we can open two accounts, traditional IRA, Roth IRA, contribute to the traditional IRA, from there roll it over to the Roth IRA. You don't need to pay any taxes as long as you are contributing to the non-deductible IRA contribution. Traditional, non-deductible. You have time till April 15th for the last year. I request everyone, please implement Roth IRA. You will remember me forever in your life. So, but if you already have any traditional IRA balances, then I don't recommend you directly. There is a tax impact. You can contribute the IRA, non-deductible IRA, but backdoor conversion may not work for you. It has a tax impact. Please work with an accountant or CPA, or at least send an email to her. I'm happy to help you and guide you. And like example, Anil, is it really true? Then why my CPA is not telling me? See, there is an example. You can do a Google search. There is a guy called Peter Thiel. He has $5 billion in his Roth IRA account because he invested in Facebook startup, and now he's getting retired in the next 2 years. He doesn't need to pay even a $1 in taxes. A golden opportunity. Roth IRA, you should invest. And if you already have any rollover 401ks, IRAs, there are so many options available what you can do with rollover 401ks, rollover IRAs. If you have some, I have done, as I said, I have done a webinar on March 30th, last Saturday. Reach out to me, I will give you the recording. Otherwise, one of the option is Roth conversion. If you have a rollover 401ks, consider converting the Roth. After that, money grows tax free. So you need to pay taxes. It's okay to pay taxes one time, but after that, enjoy the tax deductions. SEP IRA. If you are having any side business, freelancer. Now, these days in our community, many of us are side businesses. If we have any side business, whatever business you are doing, you can, if you have a net profit in your business, you maybe you have an opportunity now to open SEP IRA now before April 15th for the last year. Golden opportunity. Don't miss this. You can contribute up to $69,000. Imagine if you're in 30% tax bracket, you're literally saving $20,000 instead of paying to IRS. Keep it with you. That is the power of SEP IRA. You have time now to do it. And if you're already having big, I just said, most of us have businesses. If America is a land of opportunities, if you don't have a business, a side gig, you are missing the opportunity. If you have the business, if you are a full-time W2, you don't have any side businesses, I just said, you can't even claim your monthly mobile bill, $40 bill. You are working from home, you can't even pay one chair expenses or one table expenses or laptop expenses. But if you have a business, you can claim so many expenses. Home office, part of your utilities expense, part of your utilities, travel, meals, office, laptop, mobile, research, education, credit, and also any certifications, or paying to a CPA for the business purpose, tax planning. All these expenses are tax deductible only if you have the business and they are genuine, legitimate, and documented. And if you are having a business, you can claim your vehicle expenses, EMI, interest, maintenance, repair, insurance. All those expenses are tax deductible only if you are using it for the business purpose. And F bar, foreign bank account reporting. We have been seeing a lot of notices on foreign bank account reporting. We all hailed from India. We still may have some bank accounts, NRE accounts, NRO accounts, savings accounts, fixed deposits account, insurance policies in India. If you have any of those things, definitely you should hear next 2-3 slides. Foreign bank account reporting. It is a mandatory for every US resident to file foreign bank account reporting with the Department of Treasury if your aggregated balance at any point of time out of America in any foreign financial accounts exceeding $10,000. Example, you send some 10 lakhs rupees from US to India, and you bought something or your parents used it. Once you touch that more than $10,000 in your Indian account, you have to file FR. It's only reporting. You're not paying any taxes. Please do reporting. Don't miss this. And what is the definition of foreign financial accounts? Your bank account, savings account, fixed term deposit, fixed deposit, security, stock, real estate. No, not real estate is not there. Sorry. And also insurance policies, cash value insurance. If you have an LIC policy, you need to look into that. What is the cash value of the policy? Look into everything. Add all these numbers. Any point of time, even one day, it exceeds $10,000. You have to file FR. The due date is April 15th. So you don't have a lot of time. If you're filing an extension, it has an automatic extension of 6 months. But otherwise, you need to file FR. So what I'm trying to say at the end, we all are working hard for what? To build wealth, not to month on month income. To build wealth, what is the one of the major stuff we need to do? Tax savings, because every dollar we are earning 30, 40, 50 cents. There are so many people, millionaires, billionaires, Even in our Indian community, many people have been earning millions of dollars, they pay zero taxes. How this is possible? Only by having a right team. If you think that you are big, you can become an expert in every area, practically that is not possible. We can only file maximum tax return. That's it. Tax planning is a decoding of the law. Legally, ethically, morally, it should be right. That is what identifying the right partner is always important. And coming to us as AZ FinTax, just 2 slides are about AZ FinTax. Then I will open up the Q&A. We are experts on tax planning services. If you are my client, we do 100% free tax planning for our individual 1040 tax return clients. After filing tax return, we will sit with you, advise you, mentor you, guide you, free tax planning, free financial planning. We help you on how do you save money for your kids. We help you on how do you plan for your future. How do you, because I'm an advantage, I'm also understand the Indian rules. I am expert on Indian tax laws, US tax laws. A rare combination. I can guide you on both the sides. And also, that's for the individual. If you are a business owner, if you have more than $200,000 of income from your business, you should go for a proactive tax planning. We do as a paid service, but we would love to sit with you if you're a business owner. If you're looking for a filing taxes, we are there for you. We have a track record of zero audits till now. If once you file taxes individual 1040s with us, if any audit comes up, we will take care. You don't need to worry. You don't need to have stress. And if you're looking for any help on setting up an entity, we just charge $99 just for consultation. 1 hour, 30 minutes consultation itself, we pay money, correct? We just charge $99, filing an application, consulting, everything together, just $99. And I'm open up for the questions. And we have upcoming sessions. On April 12th, we are doing college education, kids college education planning. If you want, just scan this barcode for the newsletter. In the barcode, you will get the update once the Zoom link and everything is finalized. We have done one 401k. How do you optimize your 401k? On last Saturday, we have done. If you need those recordings, more than 500 people attended that. So imagine how much value we are trying to bring in. So you just send an email to us. We will help you the recording. And we are also doing, if you're doing an R&D, research and development, if you're running an IT staffing, IT product company, then we are doing an R&D research and development webinar on April 17th. And so many people ask me, Anil, how do I come to know you are doing so many webinars? Very simple. You follow me on social media, newsletter, Facebook, LinkedIn, AZ FinTax Facebook, AZ FinTax LinkedIn, and also follow us newsletters. We try to bring at least on average 3 to 5 webinars we do on different topics every month. We would love to educate you. We do all the research, we work out. We don't charge for any of our webinars, any sessions. We are happy to help you. And I'm open for the questions. Thank you.
Thanks, Anil Grandhi garu. So this is excellent session, Andy. It's not only tax benefits, you also explained very well on the investments, real estate, 529 plans, IRA, Roth IRA, so and consequences if you miss the taxes. This is really great session.
Thank you, sir.
Thank you so much. Yeah, so we open for the QA, and there are few questions which is there on the chart also. If
Sir, can you help me to read? If anyone
I'll
can
do
read
it. I'll do it.
Yeah.
I'll do it. But if anybody have a questions, you guys can ask now.
So I think, Vijay, we can ask them to raise the hand, then we can give them an opportunity based on their queue. Okay, you guys can raise your hand, please.
Okay. In the meantime, I can ask one question which is there in the chat. So I have a question. Can I get 2019 tax returns now? Is it possible?
You can get in transcript. Yes.
Thank you. Another one. So is the employer matching also included in the total contribution of 23,500? I believe this is related to 401k.
You are right, sir. And answer is no. This employer contribution is on top of your $23,500.
Perfect. And I have filed ITIN for my son. I got mail from IRS to send the original passport. What I have to do?
Okay, so I don't want you to send the original document to IRS. Rather, there are so many IT experts are there who can sign by validating your tax your passport. They can sign it and they can send it to, and that signature document you can directly send to IRS. That's enough. If you need any help, we can reach out to us. You can reach out to our contact numbers, and we are happy to help. But otherwise, I don't want you to send to IRS because IRS is running missing so many documents. Recently, more than 20,000 employees were laid off in IRS division. There is a high risk of losing the passports. Please don't send any confidential data or important documents to IRS without talking to your accountant or consultant.
Thanks, Anil Garu. There is another question. This guy sent, the person sent to me only. Okay, so I withdraw 100K from my IRA account. When I withdraw, there was some amount got deducted. This amount is considered as a part of my income when I do file tax the file.
Answer is yes. You are going to get a 1099 for that. Yes.
Okay. And another question on the 529, do we need to pay tax on 529 contributions?
Answer is no, sir. You will be getting a tax deduction. You are enjoying the tax benefits on the state level, but not at the federal level.
Thank you. Anybody have any other questions?
Anyone can unmute and ask me any question, anything, money, finance, tax, market, or I can answer anything about money. You can
Yeah,
ask.
hi Anil, this is Chandru. Thank you for your session. One question is, what is the right time to convert a traditional IRA with investments into Roth?
Good question. Very good question, sir. There are a couple of scenarios. It depends on person to person. So first of all, do I recommend to convert? Answer is yes. What generally whenever your incomes are low, like example, if you're running a business, sometimes if you have losses, very low income level, that is the best time to convert. But if you are if you know how do you multiply the money, how you can play the money, if you know if you are an expert, my recommendation is doesn't matter what income level you are, convert it, pay the taxes one time. After that, money grows tax free forever because you know how to play your money. So yeah. So but in simple answer, whenever your incomes are lower, those are the best times to convert. If the tax liabilities are very high, because if you have more money, like 100, 200, $500,000 of balances you have, then we recommend to convert over the time, next 3 to 5 years, every year 20% or 25% convert. So lesser tax liabilities we have.
All right, thank you.
Yes.
There is a question from Ram. I had a Fidelity 400K over 300K and I converted into IRA from New York Life Insurance. And I also had Roth IRA and the amount was $2,000 from Fidelity. And my financial advisor said, you cannot have Roth IRA at this moment. Is that true? Can't have it, Roth IRA?
Okay, as you said, if you follow the recording later, you might understand. But the thing is, whenever you have a traditional IRA balances, then only backdoor Roth IRA has some disadvantages. If your incomes are less than $246,000, then you can directly contribute to the Roth IRA. Number one, if your incomes are more than $240,000, you need to go for backdoor Roth IRA. When you want to go for a backdoor Roth IRA, you are not supposed to have any other traditional IRAs. You can have it, but you will be paying taxes on the conversion. So there's a small complexities. I need to understand your situation much better, how much balances you have, what are the things, or you can send an email to us. I'm happy to guide you there.
Thanks, Anil Garu. And another question, should we buy the investment properties on LLC?
Good question, sir. LLCs will not help you to save even $1 extra in taxes. LLC is only for the liability protection. If you are looking for a liability protection, definitely yes, my recommendation is please go and contribute, open an LLC and have the property under the LLC name. But otherwise, if you think that no, I don't need a liability protection, then you don't need. The problem is whenever you have an LLC to buy a property, the interest rates are high. That is maybe around 1 to 2% is high, but you need to do the cost versus benefit analysis and you take the decision accordingly. But answer is it is recommended, but the interest rate is what you need to consider.
Thank you, Anil garu. Next question. What are your fees for individual tax return filing? Are you still helping for tax filing for this year?
Very good question, sir. There are 2 points I want to answer here in 2 years. So number one, definitely yes, we are taking new clients till now, and we mostly by till end of this week we will be taking the clients. But if you are already late, please, if you are looking for some help, please reach out to us immediately as soon as possible. And you saw the, if you look into my presentation, there in the bar in the down there is this barcode. You can directly sign up. You don't need to call anyone. Sign up, upload the documents, automatically we'll take it over. Or if you have any questions, you can reach out to us. You can reach out to us on our contacts, whatever we are given, and ask any questions, maybe pricing or anything is there, we will answer. But in simplifying it, and also if you have filed an extension already, still we can file it. Even some other CPA and accountant filed an extension, still we can file. The advantage is you will get a free tax planning this year. Otherwise, we do a free tax planning for individuals only for our clients. If you miss the opportunity now, you need to wait for to become our client for the next year, and you next year only we do the free tax planning. Free tax planning in the whole US. You call any of your friends in any state, ask them how many times you meet your accountant or CPA. Only one time at the time of filing. We are the unique by doing a one-on-one tax planning, sitting with everyone, understand the scenario and guiding. This is about tax filing. The prices, our prices comes with, as I said, tax planning is included, tax-free financial planning, retirement planning, kids education planning, diversification of assets, everything is included, but starts from $300 and it ranges on average $300 to $500 on a typical family. But it comes with an audit protection and all other advantages. If you need a separate specific code, you can call us for the code, but otherwise our prices are like a restaurant price menu. It's competitive, very competitive market we are in. Idli, vada, dosa price menu, the same way we have the price menu. You can reach out to us, or otherwise just look into that AZ Fintax price list. You will get it in online itself, Google. You will see the complete data, or otherwise you can call us for the specific code. Thank you.
Thanks, Anil garu. On top of that, they do get some
Yes.
Mata discount.
10% exclusive discount for Mata only. Just refer your Mata. We are at the time of finalizing. Please refer Mata and you will get a 10% discount on that.
Thanks, Anil garu, for that.
Vijay, there are 2 hands raised.
Yes, go ahead.
Surabhi first, and then followed by Raghu.
Yeah.
Surabhi, you can Surabhi, right? Surabhi, you can unmute and ask your question.
Yeah, thanks to taking my question. I have one question. I have filed 2019 return. In this, IRS have to pay $4,000 to me, but I got a letter from the IRS. I am late. They will not return anything. In that case, what I have to do?
When did you file your 2019 return?
Into September 2023.
Oh, okay. This is what you're missing. If you are expecting any refunds from IRS, you have to file within 3 years. Otherwise, it's gone. 2019 means 3 years is over. You will not be getting money.
Any case, because
no, there is no. I'm an expert on these subjects, but no, there is no. IRS has clear rules. 3 years from the filing date. If you miss it, you will not get any refunds.
okay.
Yeah.
Thank you.
Okay, sir. Yeah.
Thanks, Anil garu.
Raghu garu, you can unmute.
Hello,
Raghu.
namaste. Okay. Capital gain taxes, capital gain losses unte, which is like say for example 1 year 2021 oka 100K unna anukondi. can they be compensated over the years in like a real estate capital gains to compensate చేయొచ్చా? Stock losses can be compensated with a real estate loss capital
Yes,
gains?
sir. Yes, sir. Yes, sir. I think I covered in the tax loss harvesting strategy చెప్పినప్పుడు ఆ పాయింట్ కవర్ చేశాను.
Oh, I see.
Tax losses, sorry, capital losses can be adjusted with any capital gain, long term or short term, real estate or stock market. Anything can be adjusted, sir. And there is no expiry for that.
Okay, got it. Thanks.
Thanks,
Ankit?
Anil. Ankit?
So, sir, I have a question regarding FBAR. I'm just transferring maybe $2,000 in a year, but my Indian accounts is already having more than $10,000. So still I have to file the FBAR form.
Yes, sir. At any point of time, it exceeds 10,000. 1 second. If it exceeds $10,000, you have to file FBAR.
Okay, and even if I'm not adding any money, right? It's constant. Even still, every year I should blindly file the FBAR.
Yes. As long as the money is there. If you have withdrawn the money, if the monies are less than $10,000, you don't need to.
Okay, and if I haven't filed from the last 3 years, and
Good question, sir. You can go back and file up to last 7 years with FBAR directly with the Department of Treasury, or otherwise, if the amounts are small, it's okay. If the amounts are big, you need to amend your tax returns, or otherwise, just start doing it from now.
okay, got it. Thank you, sir.
Thanks, Anil Garu. So there's a 2 questions in the chat. Do we need to declare all of interest income from NRE account in India? I know interest on NRE is non-taxable in India.
Very good question, sir. This is a myth a lot of people have, that you don't need to pay taxes here, but unfortunately, you have to pay taxes on your global income. So you have to file, so you have to pay taxes. Yeah, you have to report it and you have to pay taxes.
Thank you. What is the correct procedure for transferring sales proceeds from India to the USA?
Very simply, I will tell, but we can do with the Mata. We can do one more webinar maybe next month on repatriation of funds. Very top, highly demanded one. Each session, if I do a repatriation of funds, at least 700 to 900 people join every time whenever I do. So repatriation of funds is very. I will tell in 3 simple steps, but I'll maybe next webinar I will go through in detail. Number 1. You need to pay taxes in India before you want to move the funds from India to US. Number 2, you need to get a local chartered accountant certificate saying that the taxes are paid. Then you can move the fund. That certificate you need to give to the banker and they can move the funds. Number 3, the global income has to be disclosed in US. Calculate the taxes as required by US and take the tax credit for the money whatever you paid in India in taxes. You reduce your tax liability in US. So those are the 3 steps which you should. It's a mandatory reporting. I hope I answered, and we are an experts on that subject. If you need any help, reach out to us. We manage it. I mean, you don't need to worry filing local government, filing the taxes, getting the refunds, or moving the showing it in US tax returns. We charge some fixed fee. Completely we manage it. You relax, compliant, both countries compliant, it's our responsibility. You can be relaxed. So if you need any help, you can reach out to us.
Thanks, Anil Garu. So any last question, if anybody?
Yeah, I have one more question. Sorry. Regarding the IRA limits, right? You said 246K. Is it on the gross income, and is it for joint filers, or is it for single filing?
Okay, so I will show you that slide. You will understand that. So okay. See, if you see this screen, so married filing jointly for 2025. Okay, this is for 2025. So this is what it is. Sorry, no need. Sorry, this is what your incomes are. Okay, this is for the single $89,000, married $146,000, married filing jointly. Both have 401ks. Married, but spouse doesn't have 401k. then 246,000. But in simple terms, married 246,000 most of the scenarios. I'm sorry. My apologies. I'm targeting on why I'm confusing traditional. Okay, this is the Roth. Sorry, this is the Roth. So it doesn't matter married. If it's a married, $246,000 is the limit. If it's a single, $165,000. I hope I answered your question.
Thanks.
Yeah.
Thanks.
ఒక క్వశ్చన్ సార్.
Please, sir.
థ్యాంక్ యూ. ఇండియాలో మనీ అడ్జస్ట్ చేసి ఎవరికైనా ఇక్కడ తన తరపున మనుషులు ఎవరన్నా సరే సపోజ్ వాళ్ళు చెక్ రూపంలో మనకి డాలర్స్ వేస్తాము అంటారు. లాస్ట్ టైం నాకు ఒక $10,000 దాకా నేను ఇస్తాను చెక్కు అని అక్కడ నాకు మనీ అడ్జస్ట్ చేయమని అన్నారు. ఇది మంచిదేనా అండి ఇలా చేయటం? మనకేమైనా
No, sir.
ప్రాబ్లమ్స్ ఉంటాయి?
This comes under money laundering అండి. If they
Oh.
find out ఈ లైన్ లోపల ఒక్కరు ఆడిట్ ఫైల్ దొరికినా సరే మొత్తం అంతా కలిపేస్తారు. సో we don't recommend it all.
Thank you.
It's not worth of risk unless you're really seeing some substantial change. అప్పుడు you need to do cost benefit analysis అవంతా కానీ my
Okay.
recommendation no, sir.
థ్యాంక్ యూ వెరీ మచ్ అనిల్ గారు. యా,
Thanks, Anil Garu. So last okka question chart lo undi. That's with that we can close it.
Yes, sir.
Can you use stock losses in prior years to offset gains from rental properties?
No, sir. Capital, we have 3 types of incomes: active income, passive income, and that means real estate income, and the portfolio income, that is a stock market income. There are 3 brothers. One brother's loss cannot be adjusted with another brother's income. In simple terms, losses from the real estate cannot be adjusted with the gains from the capital gains. So it cannot be done.
Thanks, Anil Garu. Yeah, thank you so much, Anil Garu. So yes, definitely we can have another 1 or 2 sessions, definitely on 529 and other also. We'll discuss and we'll plan it out. And before we close it out, so our President Garu, Kiran.
No, thanks అండి అనిల్ గారు. I think every time you come up with all these sessions, a lot of insights ఇస్తారు మీరు. ఈ రోజు కూడా సేవింగ్ స్ట్రాటజీస్ కానీ, రిటైర్మెంట్ ప్లానింగ్ కానీ, ఇంటర్నేషనల్ రిపోర్టింగ్ ఎస్పెషల్ అది చాలా మందికి ఇట్స్ ఐ ఓపెనర్. సో ఐ గెస్ థ్యాంక్స్ అండి. It was very helpful and it will be helpful. Next we can conduct a couple of other sessions. You mentioned about special session for all the folks, right? So especially for India transactions. So we can do that next month. And with that, I think thank you everyone for joining us.
Can we
And,
have a question?
You have one question again? Is that Srinivas Tarupunari?
No, this is Vishnu here.
Okay, Vishnu, go ahead, Vishnu.
Hi. Actually, like, no, you said there's we can transfer from IRA Roth to traditional to Roth, right? Is there any tax on that, like when you do on a back door?
Okay, sir. I will show that slide to you so you will remember this in the long run.
Mhm.
So, yes, sir. See. Okay, you can say take the screenshot also if required.
Okay.
You need to contribute non-deductible IRA. This is important. If you're contributing deductible IRA, means you are deducting, you are enjoying the tax liability.
Okay.
Now you are saying that, hey, I don't want any tax benefits. That's called non-deductible. If you contribute the non-deductible IRA, then you can roll it over to the Roth and no tax impact.
Okay.
Yeah, and at any income level, this is the beauty.
Okay.
If you only have 10 million income, you can do it.
Yeah, and one more question here in the same thing. You said non-deductible IRA, right? Like if it is a deductible, can we shift that one to non-deductible?
No,
pay
sir.
tax?
Once it is done, no. But then technically it means you have eligibility to contribute to get the tax benefits. Then I mean, if it's already there earlier, then you need to pay taxes on the Roth conversion.
Oh, okay. Once you pay taxes, then we can convert into.
That's it.
Okay. Okay.
Thank you.
Thanks everyone. Thanks,
Thank you,
Anil.
sir. Thank you.
Thank you, Andy. Thank you.
Thank
Yeah,
you. Thanks,
we can
Kiran
close the
garu, for
session.
this opportunity. And thanks,
Patiently,
Anil.
you answered all the questions, Andy. Night 9:45 అవుతుంది, 9:45 PM EST. Thank you, Andy.
Thank you,
Good
sir.
night, everyone. Thanks a lot.
Thank you. Thank
Good
you.
night. Bye.